The stock market that had been in a state of denial for several weeks has finally woken up to the reality of the coronavirus pandemic storm that has triggered a series of waterfall drops this week, slashing through technical support levels as though they did not exist, catching most market commentators completely by surprise who had assumed that the virus would largely remain within China's borders. However, my coronavirus analysis in a series of articles and videos starting late January increasingly warned to expect severe market consequences in response to the unfolding global pandemic. This video is part 3 of a series of analysis that warned of the increasing probability for a coronavirus stocks bear market that was first made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. Trend analysis, starting with short-term trend as of 9th of February. The Dow had a powerful bull run to a high of 29,380 early January that it just beat a trading day ago. So Friday's dip on face value is a reaction to hitting resistance. Furthermore, the January correction was orderly, bouncing off the previous high of 28,200. So in technical terms, the current trend implies that the Dow is pausing before making another run for 30k. Even the MACD has unwound most of its overbought state of the past 3 months. The only negative is that Dow breached the uptrend line during January's correction. But even there, it has managed to recover to back above the original trend line despite Friday's drop. Also, there is a 30% probability that the Dow made a double top pattern which would target a drop to about 27,000. Though again, it is relatively low probability at this point in time. Long-term trend analysis. The Dow is decidedly broken out of a 2-year trading range that had kept the Dow capped at 27,400, thus triggering the next phase of the stock's bull market to continue higher for another year, first targeting 30k then 31k for 2020. The Dow continues to make a series of higher highs and lows, so a strongly bullish picture. Again, to emphasize that the Dow is broken out to the upside, so any downside price action should be seen as being corrective. Resistance is clearly at the current high of 29,408 and then 30,000, while support is first at the recent low of 28,200 and then just above a string of previous highs at 27,500. So any significant decline from 28,200 would be unlikely to trade below 27,500, though a break below 27,300 would target 26,000. Trend lines. Rising trend line supports are at 27,500, 28,000 and 29,000. The overall trend picture is bullish, i.e. there is no sign for an imminent bear market, too much support under the market and too soon after the breakout higher, whilst the MACD is neutral. Elliott waves. Updating the chart for my 30th December analysis, which warned to expect a correction towards 27,500 by the end of February. The stock market does appear to be following a similar pattern, which suggests to continue to expect a decline to 27,500 during Q1, roughly by the end of February 2020. So Elliott wave theory continues to suggest a weak Q1 for 2020. Again, the rest of this analysis that concludes in a detailed trend forecast for the Dow Stocks Index has first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And also remember to subscribe to this YouTube channel for the next video in this series and my ongoing analysis across a broad spectrum of markets.